Welcome to Income Tax and its Applications online course. I am S. Mayuri, Assistant Professor, Department of Commerce CA, Sri Shakti Kailash Women's College, Salem. Today I am going to discuss about some basic concepts in income from other sources. Introduction. In income tax, there are 5 heads of income. Fifth and residuary head of income is income from other source. Section 56 to 59 of Income Tax Act 1961 deals with the provisions for income from other sources. Next, meaning income from other source is a head in calculation of gross total income. Gross total income is calculated for taxation purpose. Income which does not fall under any one of the other 4 heads of income is income from other source. Next, types of income from other sources. Income from other sources is divided into 2 types: general income, specific income. Income source which are listed under section 56 subsection 1 of Income Tax Act 1961 is termed as general income. Income sources which are listed under section 56 subsection 2 of Income Tax Act 1961 is termed as specific income. Here some of the examples of general income: agriculture income from outside India, income from subletting or rent from subletting or rent of vacant land or ground rent, director's fees or sitting fees, remuneration for delivering lecture or writing articles, casual income other than that taxable under section 56 subsection 2, agency commission received by an agent of life insurance corporation, post office savings and UTI or mutual funds if it is not a regular business, remuneration for university or income received as university examiner. Interest on loans, securities, deposits and current accounts, interest on cooperative debentures, tips received by waiter or a taxi driver, family pension received by legal aids, deemed incomes, commission received by director, any annuity or pension received from life insurance corporation or other insurer under section 80 CCC. Specific income under section 56 subsection 2. Following are the examples of specific income: dividend from foreign company, dividend from cooperative society, interest on securities, winning from lotteries, races, crossword puzzles, TV game shows, card games, gambling and betting. Any amount received as gift or gift received which is not exempted under section 56 subsection 5. Income from letting of plant and machinery where it is not in regular business. Income from letting of buildings along with furniture or plant and machinery and rent is inseparable. Next is casual income. A source of income received by chance without any effort, contract, estimation or design, etc. It is a casual and non-recurring in nature. Examples of casual income are lotteries, crossword puzzles, races including horse race, card games and other games, gambling or betting. These are the incomes listed under section 56 subsection 2 of Income Tax Act 1961 and termed as specific income. Hints for calculation of taxable income from other sources: winnings from lotteries, winning from crossword puzzles, winning from race including horse race, winning from card game, winning from gambling and betting. No expenditure is allowed to be deducted out of these incomes. Tax is deducted at source at prescribed rate out of the following incomes. Winnings from lotteries if prize amount up to 10,000. Winning in crossword puzzles if prize amount up to 10,000 rupees. Winning from races including horse race if prize amount up to 5,000. Winning from card games and TV games if prize amount is up to 10,000. For certain income sources, gross amount should be considered for taxation purpose. To find out gross amount, the following formula should be used. Gross amount is equal to net amount into 100 divided by 100 minus TDS rate. Prescribed rate of TDS for casual income is 30%. In case amount of price is net received or after deduction of tax, it has to be grossed up by net amount into 100 divided by 100 minus 30%. Denominator as 70. Next, kinds of securities. Securities is a document acknowledging the debts taken by a specific authority from general public. Following are the types of securities. Securities are divided into two types: government security, general security. Government security is again classified into tax-free government security, less tax government security. Commercial security is classified into tax-free commercial security, less tax commercial security. Government securities, tax-free, not included in scope of total income. These securities are fully exempted from tax. Less tax government securities, no grossing up. These are taxable securities. Commercial securities, tax-free commercial securities should always be grossed up. These are taxable securities. Less tax commercial securities grossed up if net amount is given. These are taxable securities. Prescribed rate of TDS for securities is 10%. In case interest amount is net or received or want to be grossed up, it has to be grossed up by net amount into 100 divided by 100 minus 10%. Denominator as 90. TDS rate for casual income is 30% and interest is securities is 10%. Format for calculation of income from other sources. This tabular column shows the format for calculation of income from other sources. Points to be considered while calculating income from other source. Dividend from Indian company is not taxable. It is exempted under section 10 subsection 34. Collection charge should not be considered. For any other income such as royalty, etc., any amount actually spent to earn such income can be claimed as deduction. Depreciation can be allowed only when the assessee is the owner of the asset. Indian agriculture income is fully exempted. Foreign agricultural income is fully taxable. Gift received from a relative during marriage by way of bill from local authority, university, educational institution, hospitals, charitable institution is not taxable. Gifts received from a friend that value exceeds rupees 50,000 is taxable. Amount up to 50,000 is not taxable. Family pension received by the assessee if he or she is a legal heir of the deceased person, it will be deemed to be the income of the assessee and will be taxable under the head income from other source. If he receives his own pension, then that pension should be posted under the section salary. Family pension received by the assessee should be posted under the head income from other sources. In case of family pension received by assessee, a standard deduction of 1/3 of such pension or rupees 15,000, whichever is less, is allowed as deduction. Income from the activity of maintenance of horse for race purpose is to be calculated as follows. Stake money minus maintenance expenses. Stake money means prize money. Gambling, betting and camel race, TDS is not applicable. So, consider net amount as gross amount. Here, there is no need for grossing up. For better understanding, here is a problem to solve. Following are the particulars of the income of or compute her income under the head income from other sources for the assessment year 2019 to 20. Dividend received from an Indian company rupees 11,000. Winning from lottery received rupees 70,000. Winning from card games gross rupees 25,000. Interest received on government securities held as investments rupees 14,000. Family pension received rupees 24,600. Are incurred the following expenses. Interest paid on amount borrowed for purchasing shares rupees 7,000. Collection charges in respect of interest on government securities at 2.5% on amount received. Purchased lottery tickets of rupees 500. Here there are three expenses. First expenses should not be considered because dividend received from an Indian company is exempted, so expenses cannot be lessed. Second expenses should be deducted from interest on government securities. Third expenses is not allowed to be deducted because it is related to casual income. Let us discuss its solution. Here, first income source is dividend of rupees 11,000. In solution, it is exempted because dividend from Indian company is exempted from tax while calculating income from other source. Second income source is winning from lottery rupees 70,000. Since it is a net amount, it should be grossed up. In solution, it is grossed up by 70,000 into 100 divided by 70. Value taken as 1 lakh for calculation. Third income source is winning from card game. Since it is a grossed amount, so no need for grossing up. In solution, rupees 25,000 as it is posted. Fourth income source is interest received on government securities, rupees 14,000. It has expenses also. Expenses related to this source should be deducted. In solution, interest on government securities rupees 14,000 less collection charges on 2.5% should be calculated, and we get rupees 350. So less 14,000 by 350, value taken as 13,650 for calculation. Fifth income source is family pension, received rupees 24,600. In solution, we should calculate deduction by applying its rule, that is 1/3 on pension received or rupees 15,000, whichever is lesser is deduction. If we calculate 1/3 on 24,600, we get 8,200. By comparing 8,200 with 15,000, 18,200 is lesser and it is deducted from 24,600. Value taken as 16,400 for calculation. By totaling the outer column, we get 1,55,050 rupees as income from other source. Hope you all get understand. Thank you.